Hey, what's up, everybody? Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist Podcast, where we feature questions from you, the YFP community, to be answered by one of our very own fee-only certified financial planners. Please note this podcast is intended for educational purposes and should not be considered financial or investment advice, as we do not know all the variables to one's personal situation when answering a question. Before we jump into today's question, a shout out to our extraordinary YFP financial planning team that makes this segment possible. Your Financial Pharmacist offers fee-only comprehensive financial planning services that are customized to the pharmacy professional. So whether you want to pay off your student loans, make the right investment decisions, or simply build a solid financial plan, we'll help get your income working for you rather than the other way around. You can learn more by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Abby in Wisconsin.
Hi, this is Abby from Wisconsin. My husband and I are first-time homebuyers trying to decide where to get a mortgage from. We are interested in the doctor loan to avoid PMI and only put 3% down, but also have the 3% down conventional loan as an option. Is there a general recommendation for how many quotes to get without hurting your credit too much? It seems the doctor loans have larger closing costs compared to the conventional loans, and I'm curious which option makes the most financial sense in the long term. Is there a calculator to compare these two types of loans that includes closing costs?
Thank you, Abby, for submitting your question to be featured on this week's Ask YFP CFP segment of the Your Financial Pharmacist Podcast. Tim Baker, what are your thoughts?
Yeah, so I kind of break Abby's question down in a few separate segments. So the first one, she asks is, how can we do this without impacting credit? So there is a way to kind of work through this that will still impact credit, but it's very much to a minimal degree. So to get a quote or to get hey, this is what your mortgage would be with us, you're going to have to share some information. And that typically means pull in a credit report. So, and if you think about it from the bank's perspective, this is something that they definitely want to do because, they're not going to just lend 300, 400, whatever the amount is to anybody. So they really want to see, what does the credit report say? So a credit pull or a hard inquiry is a formal request to review your credit report. And you have to give, the mortgage company permission to do so. The other pull that sometimes people get twisted is a soft pull, which is typically, hey, I'm a bank or I'm trying to sell you a product and I want to pull your credit to market my product to you. So that's a little bit different, but a hard pull, it will affect your credit. And I've heard it can be a minimal amount. Sometimes it's hard to say like how it'll affect your credit score, but I've heard ballpark is 5 points. Not sure if that's true or not, but it does affect your credit somewhat. Now, the other thing to keep in mind is you definitely want to shop around for lenders, and that could be 2 lenders, it could be 5 lenders. But what's more important is to keep it within a certain window of time. So what the credit bureau agencies, what they allow you to do is basically they'll give you a window, and the most conservative period is a 14-day window, or I've seen it as long as 45-day, but I would go with 14. So let's pretend, Tim, that you're serious about finding the lender that you want to work with. I would take the 14-day window and interview or get as much, quotes as you can. And they'll basically condense that into one hard inquiry. So they're not going to penalize you from going to this bank, to this bank, to this bank and say, hey, that's 3 hard pulls. They're going to group that together as one. So the idea there is that you're not having all those hard inquiries pile up on your credit report. The other thing to keep in mind with this, Tim, is that the hard inquiry is one of the minimal factors, like I said, that impacts credit score. The 2 big ones are going to be things like your credit utilization. So, if you have a credit card limit of 10,000 and you're carrying 10,000, you're fully maxed out versus if it's $1,000 or less, that's an excellent credit utilization. And then also payment history. So are you, paying back, your loans on time? So that's really the first part, Abby, that I would look at is it's more about the window in which you're doing it. The second one that you ask is about, hey, we're looking at the doctor or, professional loan versus a conventional. And this is a very nuanced question. And I would say that there's, probably not a great calculator that would be able to basically show you this. But what I would really understand is the difference between APR and APY. So annual percentage rate versus the annual percentage yield. So the APR is probably the most accurate indicator of how much the loan will cost you because it includes a lot of the fees and closing costs that have to come, that come with the origination of the loan. And the APR is typically better for loans or types of debt that are simple interest, which means that you don't have this interest on top of interest that you see with credit card debts. And that's what typically an APY is better at measuring, because it compounds and it looks at almost like a yearly yield or rate. So one of the things that the Truth in Lending Act does is that lenders that you're working with have to properly disclose what the APR is on a loan, and they should also disclose what the APY is. So that's going to be the best way to, and I'm pretty sure that they're standardized documents, but that's going to be pretty much the best way to find out all of the kind of nooks and crannies, or all the things that are associated with the cost of basically taking this money to buy a home. So APR is going to be, again, kind of have that bundled amount, whereas the APY calculates the annual cost on a loan and measures how frequently the interest would compound. And again, this is typically better for credit cards, since our mortgages, they don't compound interest, meaning that interest that is accrued doesn't then get placed on the principal. That's not the case in a mortgage. You don't pay the interest on top of interest. So definitely a comparison of APR and APY with various banks is going to give you the cleanest picture of comparing what is the best deal for you ultimately. And like I said, Tim, the calculator question is going to be tough.
Mm-hmm.
There are basic calculators out there, but until you kind of see that sheet of all the different costs, it's going to be difficult to kind of parse those out to see what's what.
Yeah, Tim, I agree with your comment there on the calculator. It would be nice, but there are various doctor loan products that are out there. There are obviously other loans that are out there. Even within loan types, depending on the institution, closing costs can vary.
Yep.
So, it's just probably a little bit of an old school spreadsheet, right? As you're working, to get different quotes, looking at obviously the rate and the terms and breaking down the closing costs, and really trying to use that, to compare within that window that you talked about to hopefully not have that impact on credit. A couple resources I would reference, Tim, just to build on the discussion that you provided. On episode 162, you and I talked about Credit 101. So just looking at the overall impact of credit to one's financial plan, really understanding your credit score, thinking about credit security. Obviously, credit, a huge piece of the home buying process. So I'd encourage folks to check that out. And then also we've got a post on the YFP website. If you go to yourfinancialpharmacist.com/home-loan, that's got some great information for those that are in the home buying process, from knowing the landscape, looking at determining the budget, understanding the different loan types. We've got a mortgage calculator on there as well that you can use as an additional resource or reference. Abby, thank you again for taking time to submit your question to be featured on this week's Ask a YFP CFP segment of the Your Financial Pharmacist Podcast. As a small thank you, we're going to be sending you a super comfy YFP t-shirt. And to those listening, if you'd like to have your question featured on an upcoming episode, please go to yourfinancialpharmacist.com/ask YFP or send us an email at info@yourfinancialpharmacist.com. Have a great rest of your week.